In this presentation, we will take a look at payroll forms after running payroll, which has a health savings account, which was contributed by the employer. We will compare and contrast it to forms prior to having a health savings account within QuickBooks. For more accounting information and accounting courses, visit our website at accountinginstruction.info. We are on the home page. We currently have the open windows open. In order to open the open windows, you go to the view drop down and select the open windows list. We're going to go to the reports here and just start to run the reports for the 941 and the W2 and W3 as if it was year end at this time and see what the difference is as we added the new health insurance savings account. We'll go to the employees drop down up top. We're going to go to the payroll tax forms, the W2, and we want to process the payroll tax forms. Once we do this, we'll be in the Employee Center. This is in the paid version here, and we're in the Forms tab. We're going to double click on the 941 and see what we would have if we were to process it at this time. We're going to be in the third quarter, which is going to end in September, and run that report. I'm going to say next here and get down to the numbers we're on. We're on the third quarter for the 941s. Note that we have 3 checks here in the third quarter. Now, we ran the last one for the pay period of August, but it was actually processed in September. So what we have is when the paychecks happened. 3 paychecks actually went out, although on an accrual system, we haven't had the 3 months that were worked in this quarter, but we have had 3 paychecks that were issued in this quarter. So we issued the paychecks for the months of June end, paycheck went out in July. July end, the paycheck went out in August. August end, the paycheck went out in September. So we do have the 3 months that are here. Just keep in mind that difference in terms of the cash basis reporting for the payroll versus the accrual reporting we learned to report on the financial statements. So we have our same difference here between the Social Security wages and the FIT wages. If we take the difference between those two numbers, we're going to say, all right, that's the 12662.5 minus the 12053.5. That's 609. There's 3 paychecks divided by 3 paychecks. So that's the 203 for 3 paychecks that we put into the 401k. So that's the 401k employee. So that difference makes sense. Now, in order to get this number here, then we'd have to do a bit of a reconciliation because this is going to include some of those employer taxable and non-taxable items. So if we were to think about that, we'd have to say, okay, well, we actually paid for 3 paychecks, the $4,062.50 times 3 paychecks. This would be the total wages we would think. And then we had the life insurance at $200 times 2, that's going to be the $400. The vision, 25 times 3 paychecks, because there's 2 paychecks here because we entered it in the last pay period. So there was 2 paychecks that had this 200 life insurance. Then there's 25 at 3 paychecks that had those. All 3 paychecks are including that 25, and that's 75. And then this health insurance that we just included in the last paycheck. Now, 1 paycheck has that. And so that's going to be the 150. So our calculation then is going to be, this is what the pay would be. We're adding to it the life insurance for the 400 for the 2 periods are there. Then we're subtracting out the vision and we're adding to it the health savings. So the difference here, the new thing being this health savings account, which we're including in the Social Security wages and the Medicare wages. So that's how we get into that $12,662. So the new thing here is that we have to include the health savings account the way we have inputted into the system. It's going to be taxable for the Social Security wages. So we'd have to include it to get to this taxable income, multiply that times the rate to get this amount. This amount then should tie out to the amounts that we reported on the 3 paychecks. If we were to add them together, we should get this. Now remember, it's the employer and employee portions we would have to add together to get to these numbers, which we would recalculate. The FIT, federal income tax, is what it is. So these items could have affected the FIT, but we're not going to be able to recalculate. We can't double check our number, whatever it was that we entered into the system. If we just add up those 3 paychecks, that has to be what is going to be put here. We can't kind of double check it as we can here because of the progressive tax system. So everything else is going to be much the same here. So we'd add that up. We're going to close this back out and let's take a look at what would happen if we were to process the W-3s at this time and the W-2s at this time. So we're going to go to this W-2 and W-3. Just double click on that item. We're going to run it as of 2018. 2018, run that report. And once that is up and running, we're going to review and edit. I'm going to say next, next, next to get to the actual numbers. And here we have it. So once again, we've got our wages up top are different from the FIT wages to the Social Security and Medicare wages. If we look at that difference, it's going to be the 1,421, which is reported down here. So if we were to take this difference, we're going to say, okay, the 32,950 minus the 31,529 gives us the 1,425, the 1,425. This C now is corresponding to the life insurance that we have in place, and then W now is corresponding to the health insurance, the health savings account we have set up. So if we were going to try to reconcile this number now to the actual gross pay, we can think of it kind of like this. We can say, all right, now what's happening for the entire year? We're paying gross pay for this amount, the overtime and the regular pay, this amount each pay period. We had 8 of them. That would be 32,500. And then we have the health insurance now, the life insurance, I should say, for 2 time periods. So that's going to be 400. We had the vision at this time for 25 for 4 pay periods, 4 paychecks of the 8. We had included the vision. That's 100, 4 times 25. And now the new thing, the health insurance, is 150 times 1 pay period, or 150. So if we get to our what we would think would be our gross pay and make these adjustments to it, we would say, okay, we're going to take this as our gross pay. We're going to add to it the life insurance that's going to be included with regard to calculating the taxes for Social Security and Medicare. We're going to subtract the vision, which is going to be taken out with regard to the calculation. And now we're going to add the health savings account, which under the way we've set this up will be included with the calculation of Social Security and Medicare. So that's how we get to the 32,950. So if we go back over here, that's going to be the 32,950 here. We got the retirement plan still checked off here. Note that we have 3 quarters so far, so we should be able to add up the 3 quarters, which if we took the FIT should add up to this. The Social Security and Medicare, if we took the 3 quarters, should add up to these 2. If we were to add up all the paychecks, then they should add up as well. The Social Security and Medicare here should tie out to the 3 quarterlies as well, the 941s for the 3 quarters. However, this is just the employee portion. So notice this is just the employee portion. You can kind of work this out a few different ways if you want. You can take this amount times the employee portion, 0.062, or times the double that portion to tie it out to the 941s, which have the employer and employee portion. You can go back through the W-2s and add up the W-2s. It should all work out, and these ones make more sense because they're more on a flat tax once you know what the actual Social Security wage should be. Then you have to multiply times a flat rate. This is more complicated because we can't just multiply times a flat rate. We have a progressive rate, and so that's why this tax is a bit more difficult to really understand. So if we go through, then we have the retirement plan set up and the SDI and California state information as well. For more accounting information and accounting courses, visit our website at accountinginstruction.info.